Hey, welcome. And today we're here with Carmen, and we're going to be discussing things like how effective tax planning can save you thousands of dollars. How, when you buy a business, you want to make sure you look for all the demons to make sure you're not acquiring a problem. How you can actually stop embezzlement by understanding the differences between operational accounting and tax accounting, and how a good accountant actually takes both things into consideration to save you money long term, and why it's very important not to find the cheapest solution to a complex problem.
I'm Dennis.
And I'm Greg,
And this is the More Profit, Less Stress podcast.
where we provide the tools for more profit and less stress in your business now so you can turn into a valuable asset later. Welcome to the More Profit, Less Stress podcast. I'm here with Dennis at Takama, and our guest today is Carmen Vetian from Carmen Vetian Professional Corporation. Carmen, give us a quick, what does your company do?
So, in a nutshell, I am a CPA, professional accounting firm offering services to all kinds of different businesses in year-end tax planning, financial statements, all the tax compliance aspects. I also do some work with valuations, restructuring, reorganizations, succession planning as part of what the firm offers in services.
Nice. There's a number of reasons. We asked you to be a guest and thought you'd be a good guest, but I want to start with one that actually, for Dennis and I, is we'll say a hot topic. From our experience, most accountants or accounting companies sort of focus on tax accounting, which clearly is important because the government needs to get paid their taxes. But one thing that I really enjoyed about what you focus on is, from the client's perspective, is tax planning, like future tax planning. So can you elaborate a bit on that, like your perspective on like why you almost go against the flow on that, you do that differently. And when Dennis and I saw that, we thought, holy crap, this is something that all accountants should do for all their clients.
Certainly. I guess for me, the importance of the tax planning side of things, and the reason that I try to approach things a little bit differently, is that a lot of times in business, accountants, other professionals, not just in the accounting industry, but I find that I've heard from a lot of clients over the years that in a lot of advisory capacities, people are typically dealing reactively with the numbers, with the financials, with results. It's not to paint everybody with the same brush, but often there is the situation where you are not getting the forward thinking. When I'm dealing with a client and we're kind of closing a prior year and reviewing numbers, taxes, the tax planning that was put into effect, what I really actually try to focus on as a larger part of the meeting is what's coming in the next few years, what's coming for you with the business in the future, what are your plans, have those plans changed? A company that might have, been interested in looking to sell in a couple of years, maybe they've decided to do an acquisition or have a merger with another business that has some symmetries that they can kind of share and sort of increase the opportunity for future. So looking at what's coming, and not just from that perspective in terms of succession growth, but even from the perspective of what kinds of things are you needing to have your numbers reflect in the future as well, right? There is some flexibility with what we can do with tax planning that will allow to, better set you up for financing purposes. Because as you may know, and often businesses do recognize, you can't plan for taxes and financing at the same time. So if you're planning to minimize tax, but at the same time needing to go for financing for an expansion of any kind or acquisition of a property, you're going to shoot yourself in the foot if we're planning backwards and trying to drop your personal income and various things like that. So it just makes sense to always be looking at least 2 to 3 years out from that perspective.
I love that. Just to expand on that, so what's some advice you could give businesses? And I think Dennis and I are both going to have a lot of questions around what you just talked about. But one of them would be, what's some advice you would give business owners that are thinking about expanding, thinking about maybe buying some really big equipment, like that's $1 million for some equipment, or buying a building or buying another business? What's some tips or advice you could give them to think about for that future planning that's contradictory to, I want to lower my taxes or lower my personal income or take smaller salary? Or what are some of the tips you'd give them, or just things to think about?
Well, right off the top, I think the most important thing is kind of looking at what team they have around them, right? Because the biggest thing I find is that not having the right professionals around you, that is going to impact everything. I try to work with my clients and work with the other professionals that they have around them, whether it's lawyers, business coaches such as yourselves, bankers, mortgage brokers, all of those kinds of professionals. I try to incorporate them into what I work with, just to make sure that we're getting the best possible planning scenario, because I am not a mortgage broker. So knowing what income thresholds they do or don't need, sometimes what they have in terms of their own personal finances as well, where things are sitting. We don't get into super heavy on other personal assets and so on, right? So we deal with the business, we deal with the current tax situation, planning for the upcoming, but often we don't talk about what else they have on the go outside of that, right? So in dealing with some of those individuals, that's where that's really important. So just as an example, I was speaking to a financial advisor on Friday. We had a lengthy conversation because unfortunately we have a mutual client who is not doing so well. Health has become an issue, and there's a very high likelihood that they may not see, 1 to 2 years. So between the financial advisor, ourselves, looking at their investments, what they have, what we want to do to try to mitigate some of the taxes that are going to be coming upon that person's, potential death. Those kinds of things are important. So dealing with all of those individuals and making sure that those individuals are present, whether it's just for a personal tax situation and investments, or whether it's a business related situation where you're looking for financing, looking for restructuring, it's important to involve those and have a conversation together. So that's the key, is having the conversation with those other professionals to make sure that I'm not saying one thing that somebody else is contradicting.
It reminds me of you practice what you preach, basically, because you have a client who is in Calgary and wants to grow. So you would refer him to me to help him grow. And then you and I were able to have a great conversation behind the scenes about him, being that, today he makes so much money, but if we can take him to where he wants to get to, which makes a lot more money, and how's he going to expand and what kind of money is he going to need, and now you can help plan that tax future for him while I'm helping him grow his business and make more money. And I think that's just a great example of what you just said. To have that team around you of professionals that are good at what they do and have your best interest at heart, but that are communicating. I think that's the key right there. Probably, like you just said, you have another client where you did that. And I think how many professionals that work with business owners or people, we'll say high net worth people, or even medium net worth people, how many professionals actually talk together about that client and do what's in their best interest, helping them plan their future? Like that's probably not very common. Yeah.
No, it is unfortunately not that common. And for us, that's the most important piece of what we can offer to clients, is that value added piece, that we're not just preparing something. We're not just reacting to the most recent tax year. We're looking at, forward thinking and trying to make sure that what's up and coming for the business is kind of the direction that they're still wanting to go into.
I think a business owner would probably love what we just talked about. However, let's say, because that would take someone like you, an accountant, extra time to help them plan that future. So therefore, it's a more expensive service, right? Obviously. So some business owners probably have a mental block around, well, gee, it's going to cost me an extra, and I don't want to quote any numbers because I don't know the price differences, but it's going to cost me an extra couple $1,000s a year. However, that extra couple $1,000s a year, could turn out to save them tens of thousands. In fact, actually, it could turn out to save them hundreds of thousands, because you might be able to help them plan. And this is outside my wheelhouse. This is more your wheelhouse, but maybe plan for bringing in a family member as a partner and putting a trust together. So then multiple people can take advantage of the lifetime capital gains exemption. But that doesn't happen right away. It takes time to do that. You got to plan for that. And so maybe talk to that a little bit for business owners that might be hesitant about, well, I can get this accountant over here that will do my books for $5 and I can do it online and submit the thing here versus paying someone that would be able to help them save 4, 5, 10 times that investment? How would they get around that mental block?
That's a very good question, and it is a big point because people are used to paying for something that they can, I guess, tangibly get in a way, right? So you're paying for an accountant to step in at the year end. You have a bookkeeper, somebody's doing the initial data entry. So then you take your books and you take your stuff to an accountant, and they're required to do the year end, the taxes, the filing associated with that. And then beyond that, there isn't a lot of value put on that advisory piece. So you're correct. That advisory piece is important. And that often is something that comes in addition to just the basic preparation and, the basic planning associated with the current period. And that's where, I've seen online and I've seen, people make reference to, oh, I'm looking for a good and cheap accountant or a good and cheap lawyer or, a cheap business coach, right? That often, you get what you pay for, right? So you go to a professional for getting the services of a professional, and it's the advisory component that brings that added value. Obviously, everyone is still going to be price conscious, but it is important to realize that whatever you might be spending in that advisory piece is going to come back tenfold, because you're right. You might not see immediate result, but in the future, depending on how you structure things, you're going to have a substantial savings. I have clients that I dealt with in the past where I tried to do some planning and had some discussions with them around restructuring their business to set them up for a potential sale, because they were looking at, maybe a 5-year window, 5 to 10 year window. We did have some tax plans put together. I worked with a tax lawyer. In the end, they chose not to take the path that was, advised and restructure in a specific way that allowed them to capitalize on that lifetime capital gains exemption. So in the end, they didn't save, like we're talking about a $1.25 million lifetime capital gains exemption that they can utilize against the sale of their business. And because they weren't able to get it, I mean, they were out hundreds of thousands of dollars in taxes. And you don't want to say, oh, if you had done this, it's too late at that point, right? You can't go back and you can't unwind it and you can't change it.
Well, I was just thinking for myself, like for a lot of people, taxes becomes what can I deduct, what can't I deduct, and what do I owe at the end of the day. I think a lot of people forget that governments like to change their mind about things, and there's a heavily complex aspect to what's actually allowable and not allowable, especially between countries. I've heard people listen to tax advice when it comes to dealing with the IRS, which is completely different than tax advice dealing with the CRA or dealing with a different company. So like even something as simple as, well, what's considered to be a repair or a capital cost allowance? Well, you got to understand those differences if you're looking to make an expense somewhere. And I think way too many people have the experience of with their accountant, which is, here's my bucket of stuff. Can you organize my bucket of stuff and tell me whether or not I owe money? Not, okay, take my bucket of stuff and how do I use all of the tax law to my advantage to set up my business correctly so I know exactly what I'm trying to accomplish. And I think it's absolutely impossible for someone who's running a business to actually understand the complexity of that without someone like you who's got their back to say, hey, look, yes, you're doing some good things. Yes, you're looking to make this happen, but are you aware of this or this or this tax law, or this is how this is going to impact our decisions going forward, because this is what's coming down the pipe. And personally, I'm not interested enough in what the government is doing to be on top of all of my benefits and costs. That's why I like to hire someone who can walk me through it. Like I have got one client in particular who has a ton of depreciable assets, and understanding that you don't have to take depreciation in the year that you acquire it. There's strategies around depreciation that you can take advantage of, which he has used. I will not depreciate things for these 2 years because my plan is to borrow A, B, C in millions. So my financial statement has to look a certain way. And then once he got the loan approved, suddenly for him, the depreciation came back into effect, dropping his tax bill the next year. But he wouldn't have been able to do that without talking to somebody who understands how that works.
Well, and depreciation is one aspect that you can definitely kind of work with, right? And there's the difference between depreciation or amortization as it would
Mhm.
be for financial statement purposes versus tax purposes. So arguably speaking, a good bank or a good financial institution should recognize the difference that a depreciation is strictly, it's an estimate, right? It's an
Mhm.
estimate of wear and tear. It doesn't represent cash flow. So in looking at that, you know, you can still depreciate for book purposes, but not take the depreciation for tax purposes, realizing that that means higher taxes if you are not taking that deduction. But depending on how you set those things up, there are different ways that you can utilize some of that exactly to, you know, bring things into a better light, potentially save some tax, pay a little bit more, depending on what you're looking to trigger as well.
So, from your perspective, what are some of the most common mistakes that are made when it comes to not properly tax planning?
I think the biggest thing, of course, is like we touched on it briefly earlier. It's the need to plan for tax versus financing. So I think that's a big one, is that planning for at least a couple years out, because whether you're planning for succession or whether you're planning for expansion, needing to plan a couple years out is important, because again, keeping your income at a specific level personally so you're able to qualify for, you know, mortgaging, because even with a business, you're cross guaranteed in 300 different ways, you know, to make sure that the banks are covered. So from that
Mm.
perspective, ensuring that, you know, and even with planning for that, there's still differences, because if you deplete your money to have a higher income, you deplete the profits of the business, the retained earnings drops. Banks don't like that. They don't like that you've taken it out. Even if you argue and say, well, I took it because I could, it was available, all my obligations are more than met and paid and taxes are paid, they still don't like to see that you strip it out of the business necessarily. So it's a balancing act, right?
Yeah, totally. I'd like to sneak back to something you said earlier that prompted a question that I think people would have. So with Dennis and I, like obviously when we coach a business, our goal is for that business to grow, most importantly profit growth, but often that means you got to grow revenue as well. And a strategy we love to walk clients through is buying, let's say, a competitor or another company that either is complementary to them or is the same industry or whatever, but growth through acquisition, which is quite
Mm-hmm.
easy, honestly, because
Right.
80% of their competition is failing, or 80% of businesses they might be interested in getting into, or industries, those businesses are failing. So I think this is a really good question, is from your perspective, if they're looking to buy a company, what are advantages and disadvantages of buying just the assets versus buying the shares? I think is the simplest way I can ask that. Like, should they buy the shares or should they buy the assets? Or in that decision, from a tax perspective or from your expertise or experience, what would you suggest some things they think about are in that decision?
So I think that one is the kind of the easiest answer is typically buyers generally want to buy assets. The reason for buying assets is that you get the cost bump on purchasing that. So then you're able to depreciate that again, which is a tax savings because you are getting that deduction. So from a perspective of a buyer and a seller, buyers are typically wanting to purchase assets for that reason. Now, with that said, that doesn't mean that you don't want to buy the shares. You may want to buy the shares of a business if you're wanting to acquire losses. And if
Right.
the businesses are synergistic and those losses can be applied against your business that's successful, there's advantages to that as well. So generally, buyers wanting to buy the assets is because they're wanting to get that depreciation and having the cost bump on that acquisition. Sellers typically want to sell the shares if they're able to maximize their lifetime capital gains exemption. So to the extent that they have
Right.
not previously claimed it, that's a good tax savings for them. So that's usually from the seller side. But on the buyer side, it depends on the business that you're buying and the purpose behind it. If you're looking to buy those losses, then buying shares might be, you know, an advantage. If you're looking to have, you know, the assets and just incorporating them into your existing business, not really wanting to buy the shares of the other business for, you know, liability purposes or other things, then you would definitely be still able to incorporate those assets into yours and still capitalize on that and get the depreciation associated with the tax save that would generate the tax savings on it. So a large part of it is going to be the purpose and what it is that you're looking to acquire. You also have to look at the rest of the corporate structure, because obviously when you're buying shares, you're fully buying that business outright, and you need to look at what the best structure to do that is. Do you want to buy it? Is your existing business purchasing it? Is that going to be like a vertical acquisition? Is it going to be a horizontal where maybe the owners of the business, the existing business, are also purchasing the new business, and then they're affiliated, but it's not a parent sub situation. So all of those things kind of come into play when we make those decisions and when we make the recommendation. And it's not the same for everybody depending on what's the driving force behind that acquisition, or also what is the big asset that you're looking to purchase? Is it the equipment? Is it losses in the company? How is it that how is it that they fit together, and what are the synergistic advantages that will play into how that structure should look?
I love that. So two things. One, I think what I'm hearing is you're giving advice that, hey, involve your accountant and make sure you crunch the numbers of comparing those two situations. Because if it's a small tax loss, but there's a lot of assets that can be depreciated, then clearly lots of assets that can be depreciated will probably save you more money. But if it's a big tax loss, like if they had a lot of losses carried forward, then maybe the numbers make more sense there. So, and knowing the tax rates and how it applies, and you got to have a tax expertise to be able to advise on that.
It's a lot of conversations. I encourage clients to reach out multiple times a year. I always tell clients when I'm onboarding a new client, when I'm discussing the potential with a new client, or, taking over for a previous accountant, I always discuss that is what we want to stress, is that we want to hear from them more than once or twice a year. And it just doesn't apply only to the business clients and the corporate clients, obviously. It applies to even the personal tax clients. The example I gave earlier with speaking to the financial advisor of a client that is currently going through some severe health challenges. It's all very important, because often the biggest mistake and the biggest thing that we try to end up repairing or patching is businesses and or individuals that have not received the proper advice in the planning stages. There should always be planning, and it's not just with the bank to know if you're going to qualify for that acquisition. You need to plan as to what that best structure is, because you need to know, what is the ownership going to look like? Who's buying what? Are you buying assets? Is your company buying it? Are you buying it as an individual? What is the future goal of that acquisition as well? Like, where are you in your business life cycle in terms of bringing in this acquisition, and then from your succession perspective, how long is that going to be? What kind of things do we need to think about in how we recommend that structure happens, because of those points that are 2 to 5 years out.
Now, I know this discussion we are focusing on, because your experience is Canadian tax law, more so than the American tax law. I ran into a situation at a networking event where there was a lawyer in the room and a business owner in the room. And the conversation came up about the fact that this business owner had acquired a competitor. Mm-hmm. But what came up in the conversation was nobody did the due diligence to find out if the company he acquired had tax debt. Mm-hmm. And it turns out that when he acquired this business, he acquired $75,000 to $80,000 worth of tax debt from this other company. So as a CPA and what you're doing, what kind of leeway do you have to investigate a purchase of a company to make sure that someone isn't running into that problem? Or do you just advise, hey, look, buy the assets. We don't have a debt issue to acquire the debt. Just buy the assets and move on. Or can you actually do a deep dive to find out, does this company that you're acquiring owe a bunch of back payroll tax and GST and corporate debt?
Right. So that's all part of the due diligence process, really. And this is what I try to discuss with clients on a regular basis. Like when they're looking and they're contemplating something like this, I always say, okay, here's kind of the process. And we have a discussion about what that process looks like, what the steps are going to be, getting an NDA, a non-disclosure agreement in place, sharing of the financial information, having your accountant as part of that situation, part of that conversation, including a banker in the conversation, a lawyer. All of that stuff needs to happen at the same time, right? Because once you start down that path, even in the letter of intent, so you got an LOI that's going to indicate how you're wanting to make the offer for that purchase. And that's where we should have certain information available to us in order to best advise. So I often always say, start with a non-disclosure agreement. If everybody's serious, you can give a letter of intent. From that point, then you would get financial information, part of that financial information should include tax returns as well, tax balances, right? Making sure that there is, information available as to what the tax debts are, what other debts, even asking about contingent liabilities. A lot of that stuff should be in the purchase and sale agreement as well. And a lawyer will typically have a lot of those clauses in there that if you are purchasing the assets of a business, you will be somewhat protected by the fact that anything that, there's anything that has arisen from a period where you were not an owner, you're being indemnified against that if you have a proper purchase and sale agreement. So involving a lawyer is very key as well. I have seen situations where clients have come in and they've drafted purchase and sale agreements with the aid of online platforms available and bought and purchased assets, between themselves, between businesses, because they want to cut the cost of having the lawyers and the tax accountants or the advisors involved. And so that is another tragic mistake, because then you don't know that you're covered properly, right? So in that situation, due diligence is key. That's extremely important. And that is why you're asking for that information. If someone's unwilling to share it, if you are dealing with a seller that is unwilling to share that information, that's not really a good way to start that process, right?
No.
I want you to buy my stuff, but I want to keep a bunch of secrets from you, and I don't want you to know.
Yeah.
But I also understand that for some people, that particular style of strategy, when they sell the company, is part of it. They get into a situation of tax debt, and they feel like their only way out is I'm going to sell my company for cheap. It's going to look really good on paper, but I'm not going to tell them about that little thing I've got in the closet that I don't want chasing me. Because a lot of people don't realize how much taxes is tied to the individual corporation and not necessarily the individuals that run it. So there's things to consider there that a lot of people, I don't think, take the time to consider.
Yeah, absolutely. And so it's just that due diligence process is key, because that's going to map out what things are going to look like. And, having that independent legal advice. I've seen situations where, and lawyers don't generally like to do it, is represent the buyer and the seller, because part of that process is that you each have independent legal advice and somebody to go through that purchase and sale agreement and explain what a lot of those clauses mean for you. And that's something that when a client is going through an acquisition, I typically will always offer to have a look at the draft purchase and sale agreement after we have the discussions about, okay, here's the due diligence process. This is what we should be doing. I kind of remain involved and have discussions with them as the process goes on. And then I offer to typically, I will offer to take a look at the purchase and sale agreement as well, just to see if there's any things that can sometimes come up. And I've had the situation where sometimes things have come up that I've made recommendations that weren't included in there, and the purchase and sale agreement have been adjusted to reflect some of the things that we had discussed.
I have two questions. One, you sort of already answered, but I want to circle back and get super clarity, because I think it'd be beneficial to a listener to hear this. So someone's looking to buy a company. The seller wants to sell the shares for whatever reason. They want to take advantage of their lifetime tax exemption. From the buyer's perspective, is it the CPA that would do the investigation due diligence on tax questions? Like be able to search and say, hey, that company has this tax debt or this GST behind or whatever it is. Is that the accountant and not the lawyer that would do that due diligence?
So the answer is it is the accountant, but it usually comes from the other side, because as representing a buyer, I don't have access to the seller's CRA balances and accounts and things like that. I can, there's some things that you can do within what's like looking up if they're a GST registrant, that kind of stuff. But arguably speaking, it's a matter of you request the information in the due diligence process from the other side. So the seller will provide that, whether they get it from their business account directly or the accountant that they deal with gets it for them. They would provide that documentation to us as buyers and advisor to the buyer, and then we would review that information that they provide to make sure that it does seem to be complete, and that we are seeing, what we're expecting to see based on their representations to us.
So just to be clear, a buyer should have an accountant involved in the purchase due diligence procedure, whatever, because I'm just thinking through, would an actual lawyer know which questions to ask that you just referred to, or should you involve your accountant in that advisory group to be able to ask those questions? like what questions to ask.
Right. So a lot of lawyers will ask certain questions for sure, but they typically will ask you to get your accountant involved. Most cases, like I've been involved with the lawyers, and I'm not going to say good lawyers because there it's a matter of the relationship between the lawyer and the client as well, right? How much discussion is had, how much they involve them as an advisor as well. And similar to the accounting side of things, if you're coming in at the 11th hour and you have not been involved and you've agreed to a price, a date, like what that transition period looks like, it's almost sometimes hard depending on how far along in the process things are. But yeah, a lawyer would usually defer to the accountant, or at least get certain information and ask the buyer to get their accountant involved if they're not already.
So my second question to all this, whose scope of work is it from an advisory point of view? Is it the accountant or the lawyer? Like there might be something goofy around outstanding payroll issues to, like, I don't know, maybe an outstanding overtime payroll issue that nobody knows is coming. I would assume the lawyer probably looks into that, right? That's not an accountant type question.
So yeah, so you're talking about contingent liabilities potentially,
Yeah.
right? And that's
Yeah,
what
yeah.
in the purchase and sale agreement, the lawyers will often have clauses around those items that if something arises on account of something to do with the previous ownership prior to the effective date of the acquisition, that it is the seller's responsibility. Now, again, as far as I can't comment to the enforcement of all of that stuff from a legal perspective, but those kind of clauses are generally in a good purchase and sale agreement. And that's the difference between using a lawyer to do the purchase and sale documentation versus trying to come up with a quick purchase contract from something that you can get online.
Right. Makes sense.
So I'm giggling at the fact of how many people are going, well, I don't need my accountant or my lawyer. I've got AI.
Well, there's AI, or there's subscriptions, right? Like there's various legal sites that you can subscribe to for pennies and basically get some basic documentation. Yes, it'll touch on a lot of points that should be there, but it may not be exhaustive. It may not speak to what the reparations that would be made in case of misrepresentation, right? So it's not really going to outline what that's going to look like. So you may have touched on the fact that, yes, we agree and we're giving you the full information as we have it today, but that might not account for something that might come up 2 years from now, especially in a situation where you're purchasing the shares of a company, meaning taking the entire company over, which comes with all of its liabilities and potential liabilities at that time, right? So that's why it's important to have the clauses in there that deal with those contingencies or, audits, CRA reassessments, that kind of thing.
It's funny. As I'm listening to you talk about this, it reminds me of when I've bought my homes, that one of the things they tell you to hire is a inspector. Make sure you go through the house and use a thermal camera and use all of the stuff that's appropriate to know, am I buying something that is full of mold that I can't see? And there's all these little sub things that a building inspector will find to protect your investment of that mortgage or of that asset. But yet, if I'm buying a business, I'm going to download 4 or 5 online forums and just assume that it's going to show me where all the mold and mice are, without actually talking to a professional who can look at and say, well, did you consider the fact that you've got plumbing here, that you may have water damage in this part of your house that you can't see, as an example.
Yeah.
So as I'm listening to you talk about it, it's like, well, why would I be cheap on a business purchase for getting the right advice if, now this is where people go, well, what if I get all this information back and I don't buy the business? I guess I've wasted the money. Well, I would argue the opposite same thing. Well, what if I spent all this money and didn't buy the purchase? How many millions did I save myself?
Did you save? Yeah, exactly.
Down the road.
It's money well spent for the advisory. And I tell clients on a regular basis when we're discussing taxes in the future is, if there is a potential, it's well worth. So I'm not a tax accountant, if you will. Like I do taxes, but I'm not a specialist in tax. Tax accountants, tax lawyers that deal with very complex restructuring, I defer to those professionals for, I discuss an initial plan, potential opportunities with clients, and then we get them vetted by those professionals that do that kind of work on the more high level and extremely sensitive tax planning transactions, right? Just to ensure that everything is covered. You're not like dealing with something that might get you into an anti-avoidance, situation for taxes or tax evasion, or, not planning with the right, I guess not intentions, because it's not that you're doing something intentional, but accidentally overlooking something, that's important. So in looking at those kinds of situations, it's extremely important to spend the money. And I tell clients, if you're spending, $500, $1,000, even $1,500 for the right advice, it could save you thousands or hundreds of thousands in the long run. So you can't focus on the fact that you're spending some money today. It's kind of like even spending money on coaching and accounting, lawyers, everything. You're doing it to build your business. You're doing it for a greater purpose and for greater future value and growth. If you don't do it today, then you may be limiting the growth or the potential that you have in the future.
So just to quickly finish up this thought, the way you positioned yourself there in this little bit of a conversation, my brain went to an association of a CPA, or what you do is kind of like a general practitioner in medicine. You can cover a lot of things, but it also allows you to expose a lot of things. And then when those things get exposed, your attitude is more of, okay, well, looking at your overall health, Dennis, it looks like your ABC has an issue. I'm not qualified to discuss that, but here is the specialist you should go talk to specifically around figuring this out. Then we'll get the results back from that specialist and we can finish your plan.
Right. So it's a little bit like that for sure. Like there's some things that are a little bit more simplistic in that stuff as well. But then when we get into something that we might just need a little bit of advice, just to say, like, we'll put a plan together, and then that plan, I usually will say, okay, it's worth investing into this just to make sure that is able to actually be completed with the intent of what we're doing, right? So there's often things like, in terms of like the tax law and the way that, the tax lawyers and the tax accountants will describe things, there's certain rules and certain anti-avoidance things and planning issues that we have, because it makes reference to, CRA likes to use things like in contemplation of something. Right. So when you're putting something together and restructuring, and it's, they say, oh, if you're doing this in contemplation of a sale, you have to have a minimum amount of time lapse between, the planning process and implementation if you've done any kind of restructuring. So for example, purifying a company so that you can claim the lifetime capital gains exemption. If it wasn't, if you had a lot of cash in a business that you've accumulated, moving that out, or moving an asset that isn't used in the business, but it has, it affects the lifetime capital gain exemption criteria, having to move that out is going to require you to do that within you need a certain amount of lead time in order to make that restructuring be in accordance with the rules set out by the government, right? So, and they deal with a lot of court cases. They have a lot of access to, information on the planning side, and where businesses have or haven't been successful when they've taken maybe a little bit more of an aggressive position. So that's kind of when we defer to them, right?
Totally makes sense.
That kind of leads into another topic Dennis and I talk about a lot with clients, is laying out your P&L from a tax perspective versus maybe an operational perspective. Often actually we start working with a business and their P&L's laid out from more of a tax perspective, meaning they don't get too detailed with the cost of goods or expenses, don't really care what's categorized as cost of goods or expenses, because generally from a tax perspective, they're just like, hey, there's accounts receivable, there's accounts payable, then at the bottom is profit. That's what you got to pay tax on. That's kind of all they care about, and they'll say it comes out in the wash, it doesn't matter. So we try and reorganize the P&L with the client so you can make better operational decisions, more profitable operational decisions. And we find often, like, Dennis, what percentage of when we're working with a client do you find we get pushback from either the bookkeeper or accountant on changing the layout? Because the answer is, well, it all comes out in the wash anyway. Like, facial expression
100% of the time.
Yeah, exactly.
100% of the time. I think I took the opportunity one year to fill out my own year-end form to see what the process was like. Just because, could I do it? What's the paperwork like? What does it look like? And I started to realize how many tax code entries for expenses are very similar for things like a management fee and a professional fee have the same tax code line.
Administration fee.
Administration fee. It's all the same line. So I might have a thing on my profit and loss that says, well, I spent $100,000 in professional fees slash admin slash management, but what does it actually mean? If I don't know how that's broken out, I can't make decisions. But from the tax perspective, they don't care. It's just what's in that category and does it make sense? Has been my interpretation of that process.
In answering Dennis's question, maybe just expand on, from an accountant's perspective, your view, because I think it's different than most accountants' perspectives or CPA's perspectives on operational versus tax P&L layout. Because working in the program, you've had some experience with this and probably have a good opinion to share.
So definitely with regards to the program, obviously, I was introduced to it. I have several clients that actually work with you, and I was very interested in the way that you approached kind of the analysis that's done with the profit plan and so on. And I'm always looking for myself, because I do focus a lot on the discussions on the results and kind of the future forward thinking and the planning with clients. I wanted to get involved a little bit more with your process associated with that. So, you know, you're right. Typically, as accountants, we're looking at more like the high level things, the groupings, if you will. We call them mappings, in terms of there might be 3 or 4 different types of fees that fall under the professional fee category, whether it's accounting, legal, administration, management. Of course, management meaning like outside management, not internal owners or anything like that. But those are generalized a little bit when we're looking at it from a tax perspective, right? It's deductible, great, okay, it's going to be generalized into that. When we prepare financial statements, we do tend to short form them and generalize them a little bit, but that doesn't mean that there's not a great importance as to everything that expands from there. So we use a working paper software, and so in that, we end up kind of lumping some of these categories together, but it doesn't mean that there might not be 10 different accounts that make up that category. For a business owner that's looking at interpreting the numbers from their bookkeeping or their data entry, whoever is doing it, whether it's themselves, a bookkeeper, other professional, I think it's very valuable to have those categories line up. And if they're working with somebody like yourself that is using a tool like what you have in the profit plan worksheet that is used, I think that's really important, because it does give you the opportunity to kind of pull those reports. If you are paying somebody to do bookkeeping and or data entry for you, there is no reason why they shouldn't be providing it in the format that you as the business owner would like. And that is to allow you to do those interpretations and to be more reactive with the results on an ongoing monthly basis, not just reacting at the end of the year when you go, oh, I didn't make any money. Or I thought, you know, I'm not profitable. What's going on? Why am I, you know? So being able to analyze that is extremely important. And like I said, if you're paying somebody, they can do it. It's more work. And that's where we kind of go back to that advisory piece, because obviously, you know, rejigging it from what it was to what you want it to be is going to take time. And you need to accept the fact that there is potentially some time and cost involved with it. But with that said, there isn't a reason why you can't have it expanded on. Now, the only other thing I will say about a lot of the softwares out there, in looking at the profit plan and how we allocate and you guys allocate things like cost of sales versus operating expenses, right? Allocating the owner's salaries to a direct cost of sales component as well as an administrative component. Some of the softwares do have limitations as to how you can break out that payroll. So there is a lot of manual work that can be done, but if you get it templated, you can still do it. It can still be done, and then the client can then access their data in a format that's easier for them to transpose into what you're using for your analysis.
It's interesting when you were bringing this up, when you said it's more work. And I think we deal with a lot of different types of clients across the board, and it always comes down to, well, everybody wants the cheapest, whether it's the renovator, the plumber, the roofer, the retail purchase, no matter what it is, everybody wants the cheapest. And when you say, well, things take more work, well, if I'm looking for more value, I should also be willing to invest in that value. So I think the reason why most people don't get the reports they want is because you're paying your specific expert a limited amount of money. And that limited amount of money has a limited amount of time that they can go into it. So if you're going to pay me pennies to do a complex job, I'm going to do that complex job as fast as I possibly can, and I'm going to miss a ton of stuff because you haven't invested properly.
Yeah, looking at those individual accounts on the like in the big picture, right? It doesn't make a difference if there's 10 different types of fees under that professional fees, as long as they, line up with what the definition would be according to professional fees for deductibility. But for somebody that is very conscious of their numbers and doing the work with you guys, it's important to have those amounts broken down into information that they can easily access, because you're not helping them if you're not providing them the information in a format that they can use.
Agree 100% with that. It's we try and focus our clients on just making better business operational decisions, understanding how everything becomes a percentage of revenue, like how cost of goods is a percentage of revenue because it's the opposite of gross margin, how wages are a percentage of revenue, how marketing is a percentage of revenue, all those things. And if we don't break it down like that, you can't make those sometimes difficult decisions or sometimes opportunity decisions. Yeah. So to hear from a CPA who gets it like yourself, fantastic. Because as we said earlier, and Dennis said, 100% of the time we get pushback, and to be honest, I'm going to swear, but it's fucking frustrating because it's in the client's best interest to, right? It's in the client's best interest to be able to do that so they can make money, which goes back to the very beginning of this conversation. One thing, I'll toot your horn. The one thing I love about your approach is you're approaching it from the client's best interest, like that whole conversation. And that's what we're trying to do. And I think that's what I love about your feedback on that.
Well, and it's interesting too, because I will say, like, when I first reached out to you, like I mentioned, there's, a couple clients that we have in common. And I would just, part of it was I wanted to learn more kind of about the process and how you were helping them, and kind of just get a little bit more understanding of how I can help the clients kind of get the reports that they were looking for as well. And I do remember actually the first time I sat in on one of the monthly webinars, and I was thinking to myself, I'm like, wow, all these people that are on these webinars, they're going to be like, what the heck is an accountant doing in these webinars? Like, shouldn't you already know this stuff? Like, I'm a little like, I don't know about you, right? But for me, it was more because I wanted to be able to see how you were working with the clients and expand on that, so that when I communicate with them, I'm communicating in the same way. And then from my perspective as well, I joined the program because I wanted a different perspective. I'm also a business owner. Yes, I'm an accountant. I deal with taxes. I deal with tax planning. I got all that stuff. But in looking at a different perspective of the analysis that you do and how you get from how you actually approach the businesses, because there is a wide array of businesses. You have a very wide range of different types of clients in different industries. So it's just interesting how your program can be applied to so many different types of industries and businesses, right? So for me, it's great because even though I have a good grasp on the accounting side, the tax, the compliance things, I'm enjoying the different perspective. So that's nice because I am able to actually apply that in more detail to other clients. And as I see opportunity, depending on where they're at in their business cycle, hence the client Greg, you mentioned that I had referred to you because he was looking for what you guys are offering. And so being able to connect you as well was important, because that means that I'm giving more value to my clients as well.
It's just so much beyond just, hey, do I have to pay tax or not? I think that's the somebody once told me, like, and it was a lawyer who told me this, a good friend of ours. He said, never bring on an expense just for a deduction. It better have a purpose. He says the goal isn't to be zero profit. The goal is to be smart profit. It's how are you making the money so that way you can actually pay your bills. And if at the end of the day you owe a small percentage on a large number, I'm not sure why you're upset about that. So it's like,
yeah, I've had discussions with clients like that, and it's like, okay, but you're spending 100% of the expense that you're,
Right.
yes, it's a tax deduction, but that's a percentage of what you spent. You still, like, let's say it's, 15% tax deduction. You still spent the other 85% of that. So that's money that's now not being used in your business, right? So,
Well, I think people get lost because they'll watch videos like Robert Kiyosaki or Grant Cardone or whatever, and all these people say, I don't pay tax. I legally don't pay tax. I don't pay tax. I don't pay tax. And people don't understand two things. One, every country is slightly different. And number two, they're saying, though, making those comments because both of them have accounting teams that work with them.
yes.
They're not just arbitrarily making their own mental decision about something. They've had this discussion with their accounting firm about what's the best way to do it. And like Grant had made a comment about, well, he bought a plane because it was either that or pay tax. Well, Canada doesn't have that same law, people. Like, you have to know what's available for you.
Well, the biggest thing is that, spending the money just so you don't pay the tax, you better be spending it on something that's moving your business forward or is bringing you closer to your desired outcome. So there is that. Like, I've had clients come to me and say, oh, well, when I had profit in the past, my accountant just told me to buy assets. Okay, but even with assets, there's rules for depreciation. You don't get to deduct it 100% all at once in the year that you spent it. So now you still got to come up with the money for the taxes. Yes, there's incentive programs and other things that come and go, but as a general rule, that's not necessarily what you want to do, right? And if you are making money, you should be wanting to pay a little bit of tax, because death and taxes is a sure thing. You're going to be paying something at some point. But if you're making money, you're going to pay some tax. It's just those other high net worth individuals, if they're saying they're not paying tax, they're paying a lot of money to the proper advisors to implement strategies that are, available, various other, investment opportunities that give them deductions, like lots of different things, but they're spending a good chunk of money to get those advisors to put plans in place. They're not just not paying tax.
Right.
That money is going to something, and that's a really good tax plan.
Which is where I think it's very important that people don't get lost in those videos about all these guys that don't pay tax and not understand that there's a reason they have the team in place to allow that to happen legally. It's not just following some guy's advice online about opening up a Panama bank account and trying to evade what you're trying to do. It's literally, we have a team. That team works for us.
Right. Yeah.
It's so misunderstood for sure. And it's one of my pet peeves when someone's like, "Oh, don't worry about that. It's a write-off." And Carmen, back to your point. Okay, what does that mean? So I save whatever 15 or 25% on that. I still pay the rest. It's crazy. I want to circle back to something we talked about earlier. You made a good point about like why you signed up for the program and the advantage for you to do that. And I was going to say it's no different than, like, Dennis or I know a lot about business, but we get tax advice, or we get a CPA to do taxes, or we get a business lawyer to, like, my wife and I sold a company and we got a business lawyer and an accountant to help with that in the US. Like, there's a reason you hire other expertises to help you get the most out of that situation, for sure. And I love you brought that up, because to your point, and you went through it, you felt like that in the webinar. You're like, oh my God, I'm an accountant. People would assume. But people shouldn't assume, because an accountant's expertise is tax and all that stuff. And that's great. I tell my clients, that's not my expertise. I'm not even going to pretend to give you tax advice, because it changes so quickly. And if someone doesn't have their thumb on the pulse, you're screwed.
Yeah, absolutely. That's one thing that I find is extremely important, is that for me, I like it for several reasons, right? It's a different perspective, a different way to look at things, different discussions to have with clients, opportunities for them to be advised of different things that they could do for their businesses, whether it's connect with you guys directly and work with you, or just generally giving them information as to you need to focus on some of the numbers. Like we can only do so much, right? Whether we're doing bookkeeping services for certain clients and then doing the financial year ends and advisory, they're the ones that are typically responsible for managing costs and keeping the day-to-day finger on the pulse of their business, right? We can't, as an accountant and as an external accountant, not working internally for somebody, we are not involved at that level where we're doing those deep dives into, you know, every expense, every, you know, categorization of it, whether it should be spent, whether the business is at a point where, you know, can afford to make that expenditure. So that's something that they need to be working on, right? And whether they're doing it with somebody like yourselves or whether they're, you know, doing some own tracking, it's just perspective and being able to be savvy with that. And like you said, you need to be accountable for what your business is doing. You can't, it's not somebody else's responsibility. You need to know where your business is at, and that's important for a business owner.
I think part of that challenge is that tax law is complicated, right? What goes on in taxes isn't always a streamlined thing for someone from the outside who's looking in. So then if tax law is complicated and my bookkeeper does my numbers and my accountant gets those numbers, then I must be too stupid to understand my own operational numbers because I'm not fluent in tax law. But what it sounds like you're saying is you can understand where your numbers go and leave the taxes to the professionals, but not only just leave the taxes to the professionals, use that professional to get feedback and say, okay, look, I understand how you're laying this out. It's great for tax purposes. We're going to make this look slightly different. Oh, and by the way, now that I can see how your numbers are laid out and what you're doing, have you considered that in the next couple of years, this may be a tax consequence? Or did you realize that looking at your numbers, you're putting this much money into debt repayment this year, which is all taxable, by the way, because it's considered after profit dollars. Have you considered how you're financing your equipment or you're leasing your equipment or the structure of your loans to reduce your tax bill? But if everything's just lumped into an accounting software, yeah, as a business owner, I'm going to feel completely overwhelmed because I don't understand it, and I feel like I'm not allowed to understand it.
Yeah. Yeah. And a large part of what we do as well, and what I like to do with clients too, is kind of give them a little bit of an education of what their financial statements mean, like what each document, what is a balance sheet? What does it represent? When you're looking at those numbers, what does that actually mean? I go through the profit and loss. And again, I don't go in details necessarily the way that you do, but we do look at fluctuations and changes year to year, right? So if when we're working on something, we see that something's up, not quite proportionally to what we would expect, depending on where their sales and cost of sales are, we have those discussions. And clients that do their own planning and work with individuals like yourselves in kind of growth of their business, and that they have a better understanding and they're able to explain. Because a lot of times if clients are not keeping track of that and we're asking, hey, you know, why has this expense gone up, you know, 15-20% compared to last year? And they just, oh, we don't know. So it's important to have that information readily available and to be able to understand what the numbers actually mean.
Well, and I ended up in two situations, two of them, where because the owner had abdicated all of the numbers to the accountant or to the bookkeeper, not the accountant, the bookkeeper. Let's be very clear about this. So it was an in-house bookkeeper. Because they were abdicated those decisions to the bookkeeper was able to move things around the expenses to hide the fact that the bookkeeper was in fact embezzling. And one guy, it was to the tune of $125,000. Right? So as you're looking at the numbers, I can easily abdicate, which means give rid of all my responsibility to a bookkeeper who's going to lump it in a confusing fashion. And the accountant's not going to know any different because the numbers are just in there. I'm going to go do your taxes based upon those numbers. You're saying you can actually break it out in a way that you know what's going on to prevent that from happening, protect yourself on that level, as well as protect yourself on the tax level.
Well, and part of it is going to be, I had a great example that I have 10 years ago, roughly. I was working with a client of mine who they've been clients now for about 16 years. And they were notorious for we did data entry for them, bookkeeping. And they were notorious for getting stuff to us late. So we were about 6 months behind. And, you know, we have touch points. We reach out and say, hey, you know, this is what, you know, we need this stuff. Anyhow, long story short, 6 months, we're catching up. and we're doing their reconciliations, and something's not right. Like their sales reports and what's going in their bank is not lining up at all. We ended up discovering that over about a 6-month period, 2 employees literally embezzled around $180,000 of cash from their business. It was a retail-based business, so it's easy for that kind of thing to happen. And it was getting skimmed off the top and it wasn't hitting the bank. But because we were not just doing transactional, data entry from just the bank accounts, we were insistent on the point of sale documentation because they had a point of sale system. That's how we were able to discover it. And they did end up charging. It was 2 locations, 2 separate individuals that were working together. But they were 6 months behind the ball. If we were on time, if we received documentation on time, right, that could have been avoided within maybe the first, let's say 2 months. Maybe the first month, it might not have been as prominent. And so it might not have been as easily evident because maybe they're not depositing cash on a weekly basis. They have a safe, they keep some money aside. But in that time, we still would have been able to catch it much, much sooner.
Yeah. And I have a feeling it's not all that uncommon.
No, just for the listener to put like a serious stamp on this point about embezzlement. I had a client maybe 4 years ago, they just bought the business. Long story short, we get into the profit plan, we get into all the details. There's an in-house bookkeeper in the company when they bought it. That person was fighting the process of detailing the numbers, etc., in the profit plan. So we pushed, got that done, and that led to discovering this person had embezzled, we figured, over $400,000 from the previous owner over a period of time. So I bring that up listening to both your story. Yeah, I bring that up listening to both your stories. And then, Carmen, listening to your point about the accountant understands this might be happening, so the accountant should, to your point, be checking if paperwork matches. So I would say to a listener of this, it is way more common than you think, and you should absolutely work with an accountant who's looking for that and cares about that, because it's probably happening more than you think. Love that. I have one more question before we get a wrap up.
There's different ways to do bookkeeping. That's the other thing, right? So it's not like, yes, 1 + 1 is 2. Yes, absolutely. But there's different ways depending on what the client needs are, what the individual, like if it's somebody that you're hiring to do the work and they just want to get numbers in there, get some reconciliations done, they can do that strictly from, say, like what I just mentioned, like bank statements, right? So somebody that doesn't have a good understanding of what's important to your business and being able to be sure that from an internal controls perspective too, your bookkeeping and your internal data entry should have certain controls in place. And that's the other thing that's really important, because there's a lot of bookkeepers out there. There's a lot of great bookkeepers. There's a lot of not so great bookkeepers, same as accountants, lawyers, whatever. There's attention to detail and that those touch points with clients and making sure that you stay involved. That's what's important, right? So it doesn't mean that you'll necessarily, like if you give your records to somebody and they're just strictly going to enter off of the bank statements, they're never going to catch that. If they're not reconciling the fact that, and then even if you go to them at year end and they're not reconciling the fact that you're saying, I don't understand, according to what I see in my sales reports, I should be making money. I should have, it all depends on the documentation they're given and how they're doing the work. If you're not willing to pay them to do a proper file and, have the bookkeeping done correctly using point of sale reports, using your receivables, your payables, all those kinds of things, you can get a quick and dirty set of books, no problem. There's a lot of people out there that will do that. And it's in their best interest, because you might be thinking you're paying them $50 an hour to do data entry, but if it takes them 7 hours to do it, it's still $350. If you're paying the accountant $70, let's say, but it takes them 5 hours, you're still paying the same amount. It's just, the efficiencies and the level of the file and the detail that you're getting, reports maybe that you might want to generate out of the information that you're having them enter for you. That's the kind of stuff that's really important in using and having somebody doing it for you.
Love it. Circling back to an earlier conversation, because you actually are going through our program, what would you say, because again, just touching on the base of people who may think, well, I don't really need this because I know such and such and I'm good at this and I run my business. I know what I'm doing. I've been doing it a long time. I don't need help. Like, hey, you're going through the program. Here's some things that have helped my business, or I've seen help my client's business.
So I think the biggest thing that I am getting out of it for myself even, and that I would highly recommend to clients in general, is I think the approach from the profit plan side, right? Like, you do offer everything associated with the business in terms of marketing, pricing tools, team collaborative videos, training, performance reviews, all of those things that come into play, and even like the why people are doing it. All of that is there. Like, I've dealt with other coaches in the past, like back when I was first starting my business. But I think from your guys's program, the thing I love the best is the focus on the profit plan, because a lot of times owners don't have time and are not able to carve out that time to really focus on the profit side of the business. They're busy trying to grow the business. So they're doing sales, they're doing marketing, they're doing, HR related, employee, management, all of that kind of stuff, scheduling, whatever that might be. And I think that the way that you guys have the program lined up and set up for individuals is fantastic, to allow them to be able to interpret the results in their business and to kind of stay on top of that regularly. So that is the biggest thing that I like for not only myself, but also for clients, and recommendations for people to work with somebody that is, you should be drilling down on those things. And I've had clients that have worked with other coaches as well, and they never focused heavily on that and the processes as well. That's the key as well. You give very good tools for the processes.
Yeah. Agreed. For those who listen to this and say, wow, I have an accountant, but my accountant's not doing what Carmen just talked about, and maybe I'd like to talk to Carmen, what geographic area do you serve? Question one. Question two, how do they find you? How do they reach out to you?
All right. So geographic area nowadays with online platforms and client portals. Like, we have clients all across Canada. We have clients that actually have businesses in Canada and the US, Germany. So we're kind of all over, right? We do focus on the Canadian side of things. So it's relating to Canadian business, Canadian taxpayers. And primarily, if someone is looking to get a hold of us, it's through our website. And so that's at www.cavprofcorp.ca. The other thing I would say is, if your accountant is not working with you in this manner, I'm not looking to, take somebody away from somebody that could be doing a good job for them. The big thing is have you talk to the accountant and explain to them what your needs are, or what you would like to see in the service that you are willing to pay for. And if they're not able to accommodate, or if they're not willing to be able to work with you in order to ensure that your needs are getting met, then it might be time for a change, right? But the biggest and most important thing is that they may just not know the level of support that you're looking for. That's the other thing, right? You don't know, or they don't know, that there's a lack of support or advisory service if they don't know that you want it.
Right. Makes sense. Thank you. Okay, so our producer likes to ask a couple of oddball questions at the end. Like I won't say oddball, fun questions, just to get to know the guest and Dennis and I. So there's two questions. We'll do one at a time. The first one is, what's the best prank you've pulled on a coworker or had pulled on you? And I'm just going to go on screen. Dennis, you go first.
I never actually had any pranks pulled on me or pulled on a coworker. However, I've got a friend of mine who likes to tell his story. He worked at an RV repair dealership, and one of the guys came up behind him one time with a pair of pliers while he was bent over and pulled out some of his lower back hair, causing him to hit his head on an RV. So his form of revenge was He went to his mom, who's a nurse, got some medical grade X-Lax, came back, poured it into the dude's ice cap the next day, and then proceeded to walk around the building and locked every single bathroom. I'm glad I wasn't the
Yikes.
victim of that one.
That's funny.
Wow.
Uh, Carmen, how about you?
Well, I don't think I can touch that
It's
one.
not my story. So, I mean, whatever you have, what's
Yeah,
your story touches that one.
but still, I mean, well, I guess I we've done the typical like scare the crap out of people type of thing. But one thing that we actually do in our staff meetings, we started doing it a while ago just to kind of stay on point, is uh, my kids, when they were younger, found the poop emoji hats, right? So, you know, the little poop emojis that you get on your phones. So at the dollar store, they found these hats. And so what we like to do is during our staff meetings, if someone goes off topic and we're really trying to, you know, we're tight for time and we're trying to stay on topic and we're not at the end, like at the end of our meeting, we have a little bit of banter and stuff. But if someone goes off topic, they have to wear the poop hat through the duration of the meeting. And there's two of them. So I have admittedly had to wear the poop hat. So I have been the instigator. But years ago when I was at camp, the only year I ever went to camp, I want to say I was about 14. I did orchestrate a big prank on the entire dorm for the boys' dorm. And it was a church camp actually that we went to. And it even extended to the pastor that we were trying to prank him. So we did stuff like we went to the bathrooms and we unscrewed all the shower heads and put Kool-Aid powder
Oh,
in the shower
brutal.
heads and screwed them back on. We saran wrapped, like we put saran wrap under the toilet seat, but around the toilet.
Yeah.
So,
Yeah, yeah.
did all of that kind of stuff. We saran wrapped all the boys to their bunk beds. So all the boys got saran wrapped to their bunk beds, painted their fingernails and all that kind of stuff. But at the end of it all, we thought we were all so clever, right? A bunch of 14, I want to say 12 to 14-year-old girls. The next morning, we all got up to get ready to go to breakfast, went down to the washrooms, and the pastor had switched the names on the bathrooms. So the girls' bathroom was now the one that we
Kool-Aided.
completely Kool-Aided. And so we walked in and we're all ready to go into our bathroom. And he says, girls. And then he points to the signs. And so in the end, we had to clean up our own mess.
Gross.
But it wasn't
Smart.
at work, but it was still a lot of fun.
I was gonna use the saran wrap one as my example, so now I can't because you did. um, I'll do a different one. At work in Calgary, we had a ski shop in an old in there were two buildings beside each other, and there was a small corridor between them. So we expanded our ski shop, and they punched a hole in the walls and built some bracing, and then kind of drywalled it in. And the part owner of the ski shop that managed it was afraid of this because he was always like, oh, these two buildings, like, what if they fall down? Was the construction okay? He was always freaked out about it. So we went and taped a loonie with a piece of dental floss to one of the windows and ran the dental floss kind of along the roof through C hooks, and we'd pull on the dental floss, and the loonie would tap on the window like a cracking sound. So, so we did that every day for like 3 or 4 days, and got him so freaked out. Thought it was funny. Got him so freaked out. We show up for work on a Saturday, and the fire department's there. He's called the fire department in because they're worried the building's gonna. So we didn't have the heart to tell him.
Collapse.
That was us playing a joke because I'm sure that would have come with a hefty fine. So if he watches this like 30 years later, I'm sure he's going to be pissed off. Okay, second question.
Or laugh. Or laugh.
Yeah. What is the movie you could watch 100 times? Dennis.
I think
Don't
we
say
have watched
Titanic.
100 times. It's
Don't
probably
say
Couples Retreat.
Titanic.
No.
Couples Retreat. Good one.
One of my favorite movies, two Couples Retreat, and the other one is Click with Adam Sandler.
Yeah. Yeah. Couples Retreat's awesome. Yeah. Carmen, how about you?
Well, I like the fact that you like the Vince Vaughn, Adam Sandler stuff. So For me, I would say one of the ones that I could probably watch like a billion times. There's actually the two of them, Grown Ups 1 and Grown Ups 2. My kids and I laughed so hard, and we religiously watch it every 1 to 2 years. For some reason, I don't know why, like it was just, yeah, it was one that the three of us just absolutely just could not stop laughing. And to this day, like they're all grown up now and, but they will watch that movie and we'll watch it together regularly.
Awesome.
It's funny that
I love
even
all
after
those.
many
Those are,
years, it's still funny.
yeah,
It
those
is.
are all good. I'm going to throw two out. One's an easy one. I'll say Elf because it's a Christmas movie. We watch it every year. But the other one is a hidden one is The In-Laws with Michael Douglas and Ryan Reynolds. I don't know if you ever seen that. Hilarious. That's a good movie.
Yep.
Well, Carmen,
Yeah.
thank you very much. I'm positive the listeners will have got some great information and learned a lot, and at least it will have helped them start to think about things to ask and think about in their business. So thank you very much. Appreciate you coming on board. Thank you.
Thank you guys for having me. And you definitely got me way out of my comfort zone.
It's good.
Thanks for listening to the More Profit, Less Stress podcast. If you liked what you heard, be sure to subscribe or follow on your favorite podcast platform and leave a comment or review if you're feeling generous. To learn more about us and what we do, check out our website. Until next time, take care.